Welcome back to the channel and welcome back to another Fetch update. We want to take a look at the Fetch price set because, ladies and gentlemen, this is probably one of the hottest altcoins there in the market today. And I mean, rightfully so, this thing is actually really doing well. So what we are seeing here is a very simple structure called a cup and handle formation. Now, the problem that may arise with this kind of setup is that when you want to trade it, I mean, there is a misconception obviously across the market as to how you come up with the price target price. So, most people would actually go ahead and do something like this, right from the very top of that to the bottom of the cup, right? And then you take that when you break out of that neckline or the resistance line. So you'll be looking at a price target of something like $5.40 thereabout. But then again, some other people will say, you know what, you actually have to take only the depth of the handle. So, I mean, by the way, I'm saying cup and handle. If you haven't seen one before, I mean, this is why it's called a cup and handle formation, because this is the cup right here, this is the handle. So, I mean, that's where the name comes from. So, your price target here, your technical price target would actually be something like, $1.57 there about. I mean, really conservative in my own opinion. So, which one are we going for? Right now, in this case, I would have actually gone with the conservative one, but I'm not going to go with that because this chart is actually looking much more bullish than that. So, I mean, throw away the cup and handle formation for 1 second, right? I'm going to show you how we can actually come up to a different price set, which actually is very optimistic right there. So, I mean, take a look at the price set here. We can see 1, 2, 3, 4, 5 webs to the upside here, and which let me actually go ahead and clear this so that there is less noise on the price set. So, according to early 12 theory, we know that price moves in waves, right? So, this is your wave 1, this is a wave 2, and this is a wave 3 here, wave 4, with your fifth wave right here. This is the end of a cycle. Then what you expect is an ABC correction. We actually see that definitely here on the Fetch price set. That's 1, 2, 3, 4, 5 to the downside there. And then what you are looking for, obviously, is continuation again in terms of elite wave theory. We are looking at 1, 2, and I think this is the beginning of the third wave. Actually, we are maybe somewhere in the middle of the third wave. Then we see with the fourth wave to come, which is the corrective structure, and then a fifth wave of the final stage price. So this is something that I expect for Fetch to do in this bull market right here. We've already started the wave 3. It's really one of the most optimistic ones. I mean, really the most exciting in most cases, but I will see how far that goes right there. Right. So in terms of price targets, I mean, it looks like we are really guaranteed that we're going to take the previous high right here and even continue further. But how really high can we go here? I'm going to draw your attention to this structure that we see on a daily time from here. So you can kind of see that this chart is exhibiting something like this here, where you see your rally, you see a crash, and then you see something like a retrace right here. See this price that is reaccumulating here, and then we want to go forward by even higher. But how high can we go is the question right here. Now I'm going to be telling you something that is almost guaranteed here. I mean, it may not be the best price target, but I think it's something that is actually more likely to happen. So let's take a look at what Ethereum did back then in the day. You can see the same setup that I was actually talking about just now, saying that, look, we are rallying right here, we crash, and then we retrace, right? We go into something like a retrace right here, and then we go hit this specific price target right here. That's the same structure that Fetch is following. So from a field adjustment perspective, if you just take a look at it from the very top right here to the very bottom, you can see that this price that hit the 4.236 field adjustment level, then it stopped and then started falling, right? And I mean, this is actually holding much significance. I'm going to show you in a moment. We also have got the same setup here with Dogecoin, where you see a coin rallying, right? You rally, and then let me go ahead and catch that one nice and easy. So you rally, you crash here, right? You go into your retracement, and then you further reaccumulate, and then you're looking to further break to the upside. Now take a look at what happened with Dogecoin, right? From that structure here, the top of the structure, to the bottom of the structure here. You can see Dogecoin managed to stop right at the 4.236 field adjustment level there before it even continued higher. So, I mean, as I was saying, that the price that I'm going to show you is probably actually much more conservative, but there is another chance that this thing is going to even continue higher, just as you see with the example here with Dogecoin. Another example would actually be Bitcoin right here. So you can see that we have got quite a number of examples which are reliable right here. You have your rally, you have your crash, you have a reaccumulation, a retrace, and then reaccumulate here before you even continue going higher right here, hitting this specific price target of $69. And I want to show you that here, again, according to those field assessment, the tools right here from the very top here to the very bottom of the structure, look at what Bitcoin hit, exactly the 4.236 field assessment level. Now going back to our fetch prices here, if we would apply the same concept right here from the very top here with our favorite adjustment to the very bottom here, we are looking at something like $4.94 thereabout. We can wind it up to something like $5, and that actually comes into confluence with the cup and handle formation pricing that we were looking at the very beginning of the video. So yeah, there is a very, very good chance that we can do something like this, and I expect this to happen in the first quarter of 2024. So we are looking at between March and February of the next year. But as I said already, this is going for the, almost guaranteed case scenario here. But as I said already, this price target is actually one of the, most conservative price targets here, because I'm just going for something that is guaranteed, something that I've actually seen before in markets. But the honest truth is there is huge potential with Fetch that even that price target there is probably the worst case scenario, right? So even taking a look at it from the Elliott wave theory that we were looking at. So you see, this is, your first wave, right here, wave 1, wave 2, wave 3. This would only be the top of the wave, the third wave, maybe before a fourth wave correction here, which would look like something like this here before you even continue further to the upside. So, this is actually super conservative in my own opinion, but as I said, again, it's actually the much more guaranteed situation right here. But obviously, none of what I say is financial advice, and you should not buy or sell anything because of anything I say, all right? But if you like the content, don't forget to delicately tap the like button, share the video with your friends and family, and I'm going to see you on the next one. Take good care of yourself. Bye.